what is up everybody? Sean here. And if you're anything like me, I am just like amazed and perplexed at how fast the stock market is recovering. Not even a few months ago, really, that we hit rock bottom. Some of these stocks have plunged 90%, 30, 40%. In some cases, we're starting to get close to pre-pandemic levels. So that means that the stock markets have rallied or increased so much, we're almost back to where we were before this whole pandemic hit. But the reason why I'm so perplexed by that, we have double-digit unemployment rates, businesses are shutting down, big companies are filing bankruptcy. And so I wanted to figure out, like, why is this happening? How is it that the stock market is increasing so much, but yet our economy and the future of it still seems so rocky? So that's what we're gonna be talking about today. I did a little investigating into it to figure out a little bit more, and I came up with some pretty interesting things that I think could be the reason why this is occurring. But before we get started, make sure you smash that like button for me. If you're new to this channel, thank you so much for joining in. If you're all about financial freedom, financial independence, creating life on your terms, then this is the channel for you. Make sure you check out my other videos. I talk a lot about all the stuff that's going on right now in the economy, how to combat it, and how to forge ahead. So let's dig into this a little bit. So what is going on? Like I said, I was just watching the S&P 500 the other day, and I noticed we hit over 3,000. And I was just like,
what?
How are we already back over 3,000? And for some of you, like, what are you talking about? Let me just tell you something real fast. So 3,000 level at the S&P 500 is where we were back in around October of 2019. Now, the reason why that is so shocking to me, typically when the S&P 500 is doing well, it means that our overall economy is doing well. And so if we're back at the 3,000 level compared to where we were back in October, not always, but typically it would mean that we're probably producing and doing about the same as we were back then. And I know that is not for sure, because back in October, our economy was booming. We had like ultra low unemployment rates, economy was going well, people are doing well. And today, when you look at it, it's not so much, right? I mean, people are worried about losing their job. Most people have been furloughed. Some people are finally going back to work, but as a whole, it looks really terrifying. So how on earth could we be at the same levels as we were just towards the end of last year, but be in a situation where we are in sheer panic and chaos? But what I found was that it came down to probably a couple things, and this really is probably the main driving force as to why this is actually happening. Let's take a step back. Like I said, around the beginning of March, we kind of hit this time where we had a forced shutdown on basically all the economies. Everybody was forced to stay home, businesses had to close down, and we were on a very temporary kind of shutdown, sent a major scare to people, because when the government tells you that a major catastrophe is about to happen, that everybody needs to stay indoors, that everybody might die, that's going to shed some panic. And it did. What it did was it shed a massive sell-off in the stock market, because let's face it, investors did not know what the future outlook was going to be, and they wanted to get their cash out before there's a massive collapse. Well, in the event of doing that, it kind of created a collapse, that we started seeing record-breaking single-day losses in the stock market, in the history of the stock market. We also triggered a lot of breakers. And despite all of that, we kind of obliterated the stock market. So how did that change? Why is it now all of a sudden that just within a couple months, we've already amazingly recovered? Some industries are back to pre-pandemic levels. Some have actually gone past pre-pandemic levels and are skyrocketing, because that to me was what was really confusing. So I took a little more investigation and started realizing that there are some reasons why this is happening. Now, number one, we need to remember that when the chaos was happening, the federal government basically jumped in and said, hey, we are 100% committed to making sure that this economy does not go down rock bottom and doesn't stay there. They were 100% committed to having this turnaround as quickly as possible. And in order to do that, injected a $3 trillion stimulus bill into the market. The fact that the government stepped in and had the largest stimulus bill known to man in the history of all stimulus bills, it gave a lot of reassurance to investors. So we had a flood of investors just going and investing, wanting to capitalize on the discounted rate. In fact, it was so much so that the majority of people between household incomes of $35,000 to $75,000 invested at least a portion of their stimulus check into the markets. Companies like Charles Schwab saw a massive increase in new accounts being opened, and apps like Robinhood also saw a massive influx. I mean, this is huge. People that never invested before are starting to invest and realizing like, hey, this market is really cheap. Let me take advantage of this mess. But that only solves part of the problem because like I said, the government only put in so much money. And even then, even when you inject all this money, it doesn't exclude the fact that like, hey, people are still unemployed, businesses are still shut down. How is it the stock market is still continuing to crush? Well, the second thing that I came up with and I started realizing is a major contributor to why the stock market is increasing at such a rapid rate, in particular the S&P 500, is because of FANGum. Okay, so what is FANGum? Before we talk about that, what is the S&P 500? Because some of you don't even know what that is. The S&P 500 is simply the 500 largest companies trading on the New York Stock Exchange. But here's something I found really, really interesting. If you actually sit and analyze the 500 largest companies, you actually notice that 494 of those companies have actually lost money year to date. Okay, wait a minute.
So 494 companies have lost money, but yet the stock market S&P 500 is soaring. How is that possible?
Well, what you have to understand that within the S&P 500, there are actually 6 companies that comprise 25% of the overall value of the S&P 500. And that is known as FANGum. And they comprise of Facebook, Amazon, Apple, Netflix, Google, and Microsoft. Now, these 6 companies have skyrocketed year to date. And this is why, despite the fact that 494 companies have taken a loss this year, these 6 companies have crushed. I mean, when you have an economy where everybody has to stay at home and everybody is forced to stay at their house, not leave, businesses are shutting down, what do people do? They watch Netflix, they go on Facebook, they go on YouTube, which is owned by Google. All of these companies are crushing. They're ordering all their stuff on Amazon and having it delivered to them so they don't have to go out. Every single one of these companies are basically in a prime ability to capitalize on this particular moment in time. And because of that, they're doing exceptionally well. Some of these companies are doing as much as 13 to 30% already year to date, which is astronomical. And I think we're gonna be seeing this a lot more as time goes forward. We're gonna start seeing that a handful of companies are gonna comprise majority of the weight in the markets. And that's why that even though most companies are suffering and most companies are at a loss right now, you have a handful of companies who also happen to be the largest companies who just continue to crush and continue to grow at an exponential rate. Take Tesla, for instance. While they're not in the S&P 500 yet, many people believe they are going to be pretty soon at some point, and they are also crushing. We're starting to see this new normal, this new trend of a handful of companies just getting so big, so powerful that they're able to excel no matter what. Because here's why. There's only so many companies that are probably worth investing in, and there are millions of people who want to invest. So when you have this many people that are investing within so few companies, even if the market's not doing so great overall as an economy, these companies still have the ability to still do well because so much money is getting injected into them. So once I started analyzing this and starting to see these correlations of the federal government and FANGum, you start realizing like, wow, this is why the S&P 500 has been crushing lately. So what are your thoughts on this? What do you think? Why do you think that we are continuing to grow? The other question we have to consider is, did we miss the mark? Is it too late now? Because hey, we've already recovered or almost recovered to pre-pandemic levels. You're thinking like, oh my God, I missed my time, because you probably thought this was gonna take some time, because from the history of other stock market crashes, it typically takes like a year, 18 months or so to get back to normal levels, and it's only been like 2-3 months. Here's my take on this. No one knows if we're retesting or not, which is a heated debate at the moment of like whether or not this is a temporary rally in the middle of a bear market, or if we've already exited the bear market, we're back into a bull market. We don't know yet, and no one really does know. I don't care who you are, you cannot time the market. No one truly knows what's going to happen. There's so many factors and so many variables. If this pandemic gets even stronger again, if the coronavirus resurges, we may retest the lows, we may jump back down. But if it doesn't, we may continue to climb. But we can't be thinking about the short term, oh my gosh, I missed it, this was my chance to make that 30% increase right away, or the 50% increase or whatever, or let's say even 100% increase. Look at it this way. Let's say that you timed the market perfectly. You were one of those rare people who just somehow just saw it. You knew that on this particular day, this particular time, this was the absolute rock bottom, and you invested, and you put in $10,000 because you're like, hey, this is all I've got, but I know this is rock bottom, that's gonna skyrocket. Man, you timed everything right. So you invested $10,000 and the stock grew 50% within 2 or 3 months. I tell you what, let's say it grew 100%. Well, while 100% return is absolutely phenomenal, for most people, it's not going to dramatically change their life. If you invested $10,000, even a 100% return is $10,000 return, a $10,000 profit. Now, I'm not gonna lie, I would love to have an extra $10,000, who wouldn't? But when we're talking about in terms of being able to retire, create financial freedom, that's not the particular thing that's going to basically create your entire future. Now, here's the thing. Let's say you already had a couple $1 million in the bank and you had invested a couple $1 million, got a 100% return. Like, holy crap, that is amazing. But for most people who are probably watching this, maybe you had $1,000 lying around, a couple $100, maybe you had $10,000 or $20,000 lying around. Even if you invested, even if you timed right, you got that 30%, that 50% return. While it would help, it's not going to create that financial freedom that we're talking about. So it's not to say like, don't even worry about it, but at the same time, creating true wealth is a long-term thing. And what we need to start thinking about is not timing the market, but time in the market is the thing we need to be thinking about. So this just goes to show that whether or not we miss the mark in this particular like myopic moment in time, this very small moment in time, honestly, it does not matter, because in the grand scheme of the next 10, 20, 30, 40 years, the market's going to be higher than it is now. So that means that we need to get into a habit of simply investing every single month a little portion of our income, of our earnings. And basically, sometimes we'll buy a little high, sometimes we buy at a value, but over time, we're going to see that growth. We're going to see that wealth build. And that's how you're really going to truly get wealthy and build that massive wealth. It's not going to be from one home run hit. So what are your thoughts on that? I want to hear from you below. Did we miss the market? What are your thoughts on why we rallied so much? Are we in a rally within a bear market right now? Are we out of the bear market going to our bull market already? What are your thoughts? I want to hear about them below. Make sure you comment below. If you have not smashed that like button yet, what are you waiting for? For those of you who are new to this channel, thank you so much for watching. I really appreciate it. Make sure you tune in for other videos as well. I also have other videos, so make sure you check that out regarding what's going on, different stimulus proposals going on. So check those things out and stay safe out there, be smart, and we'll talk to you soon.